This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, January 27th, 2016. Euro dollar. So the euro remains confined to a consolidation right now. The downside pressure remains intact, with the market potentially putting in a lower top at 110.60. Look for the market to be well capped into rallies towards 110, with a lower top sought out ahead of the next downside extension below 107.11 and back towards the December base at 105.21 further down. Only back above 110.60 would compromise the bearish outlook for the euro. Sterling dollar. So cable has done a good job extending its recovery out from those recent 140.80 lows from last week. Those were the lowest levels since March 2009, and there is risk for this correction to continue higher into the 146 to 148 area. Ultimately, though, the broader downtrend remains intact, and any rally should be well capped ahead of 150 in favor of the next lower top and bearish continuation below 140.80. Dollar yen. So dollar yen has done a good job of recovering out from recent lows after taking out the previous August 2015 base at 116.30 and trading down to 115.97. At this point, though, the broader downtrend or the broader downside price action remains intact, with any rally seen well capped ahead of 120. Only back above 120.65 would compromise this outlook, while inability to clear 120.65 will keep the market focused on a potential lower top and break back down below 115.97 and towards the 112 area further down. Euro Swiss. So a critical break in Euro Swiss on Tuesday, with the market taking out major range resistance at 110.50. The break above 110.50 now opens the door for the next major upside extension in this market towards the 114 to 115 area further up. At this point, any setback should be very well supported into the 108 area, while only below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is recovering out from those recent 68.27 multi-year lows, the lowest level seen since March 2009, though any rallies in this market continue to be very well capped and the market adheres to a broader downtrend. Look for the rally, if we do see a further upside, to trade into the 71 to 72 area before a next lower top is sought out in favor of a bearish resumption. Ultimately, only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So we're seeing dollar CAD finally enter a period of correction after trading up to near 13-year highs at 146.90 the other week. At this point, there's risk for additional declines in dollar CAD towards the 140 area and really into the 138 to 140 area before the market looks for the next major higher low and resumption of this strong uptrend. Ultimately, only back below 138 would compromise the current highly constructive outlook. Kiwi dollar. So Kiwi is doing a good job of consolidating off recent lows at 63.47, though the downside pressure remains intact here, and any rallies are seen well capped up towards 67 in favor of resumption of declines back down towards the lowest level since 2009 from back in 2015 at 61.30. S&P 500. So the S&P 500 has done a good job of recovering out from recent lows after taking out the critical August base at 1834, with the market finding support at 1811. At this point, there's risk for additional upside in this market towards the 2000 area, though the price action is now classified as corrective, with a lower top now sought out somewhere ahead of 2000 and ideally below that previous support now turn resistance at 1993. The break below that 1834 August base was a significant development and further strengthens the prospect for a major structural shift in this market over the coming weeks and months. Gold. So a major breakout for gold in Tuesday price action, with the market clearing critical resistance at 11.12. The break above 11.12 now sets up a fresh higher low now at 10.70 and exposes the next major upside extension back towards the 11.92 highs that were seen back in October of 2015. At this point, any setback should be very well supported, while only back below 10.70 would compromise the newly adopted bullish outlook for the gold market.